Hello, this is Japanese Economic Review Channel. Welcome to the April 2026 Japan Trade Briefing. The key takeaway today is Japan's 301.9 billion yen trade surplus. This marks the third consecutive month of surplus, largely driven by a robust global semiconductor cycle and historic yen depreciation. As we dive into the data from the Ministry of Finance, we will explore how tech demand and currency valuation are reshaping Japan's macroeconomic landscape. Looking at the macro picture, April exports surged by 14.8% year-over-year to 10.5 trillion yen, our eighth consecutive month of growth. Imports also rose by 9.7% to 10.2 trillion yen. While the headline surplus is 301.9 billion yen, the seasonally adjusted figures reveal a more normalized 236.5 billion yen surplus. This continued expansion highlights Japan's resilient trade momentum. However, a deeper look reveals a critical divergence between value and volume. Export values surged nearly 15%, yet physical volume grew by only 3.4%. Conversely, import volume shrank by 3.4%, but cost Japan 9.7% more. This gap is heavily driven by the yen's depreciation to 159 yen and 27 cents per dollar, a 7.8% drop year-over-year. The weak yen inflates headline values, masking flatter trade volumes. Regionally, we see stark contrasts. While exports to Asia reached a record 5.79 trillion yen, yielding a 273 billion yen surplus, our U.S. surplus shrank for the fifth straight month. The EU provided a major bright spot, returning to surplus for the first time in 27 months. Meanwhile, Japan's structural deficit with China persists. This highlights a growing polarization in our major global markets. Focusing on the U.S., both exports and imports hit historic April highs. Auto and construction machinery exports drove growth. However, the 697.4 billion yen surplus actually represents an 8.6% year-over-year decline. This is because import velocity, fueled by massive surges in motors and non-ferrous metals, is outpacing export growth, squeezing the overall trade balance with our largest partner. The EU presents a dramatic turnaround. Propelled by a massive 113.5% explosion in semiconductor manufacturing equipment and strong auto sales, exports to the EU jumped 26.9%. Coupled with a 46% drop in aircraft imports, this dynamic triggered a 23.6 billion yen surplus. This marks Japan's first trade surplus with the EU in 27 months, showcasing highly effective penetration of Japanese tech. In Asia, trade volumes reached record highs, fueled by an integrated electronic parts supply chain. Yet, the situation with China remains challenging. Despite an 88.6% surge in semiconductor machinery exports to China, it couldn't offset the massive influx of Chinese electronics. Consequently, Japan recorded its 61st consecutive month of deficit with China, totaling 772 billion yen. Finally, our commodity spotlight reveals a highly interdependent global tech supply chain. The semiconductor engine dominates both sides of Japan's ledger. We export massive amounts of manufacturing machinery to the EU and China, while importing huge volumes of finished electronic parts from the US and broader Asia. Japan firmly remains the vital hub in the global semiconductor ecosystem. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.